Igoli, City of Gold. Johannesburg sits on top of a reef containing around 40% of the world's known reserves of gold. In February, the gold price hit $1,000 an ounce again, and there have been predictions it could go to $2,500 in the next 3 to 4 years. Yet South Africa has lost its #1 position as the world's largest producer. China is now #1, and the United States has just pushed South Africa into 3rd place.
The mines are relatively old and they're relatively deep, and the grade of ore that they're bringing up from the mines is declining. Contrast that to other regions in the world where they're mining much nearer the surface and ore grades are higher.
Safety issues and problems with the power supply also held back production. But the bottom line is that South Africa has the highest costs in the world, on average around $600 an ounce. 95% of South Africa's mines are underground, and the gold is buried a long way down.
AngloGold Ashanti's Mponeng mine just south of Johannesburg has the world's deepest mine shaft, down nearly 4 kilometres, and they want to dig even deeper, down to 5 kilometres. That's enough room for 15 Eiffel Towers end to end.
Even Johannesburg's old gold mine dumps are now being exploited for the residual gold in the topsoil. The sites are much easier to work and don't have the same safety and electricity issues. The huge mounds dotted around the city are more than a century old and a constant reminder of the city's gold rush past. DRD Gold owns the Top Star mine dump in the centre of Johannesburg. It's 50 metres tall and something of a landmark. It was also home to the world's highest drive-in cinema, but it's had to go to make way for reclamation. This particular project took around 3 years to get off the ground, but it was worth the wait. The dump contains around 129,000 ounces of gold, of which they intend to recover 65%.
Well, it will run at a margin in excess of 100%. At a gold price of $1,000. The delay in getting it going actually worked to our favour, because the margin is significantly better now than what it was when we initially decided to go for this project.
Gold's star hasn't always been so bright. Between 1980 and 2001, the price declined to $260 an ounce, rather like a faded movie star, out of fashion as the upstart fancy financial instruments captured the imaginations of investors.
So whilst you had Big Bang, you had deregulation of the financial markets, gold was left on the sidelines. It wasn't rising, nobody was interested, there was very little money to be made in it.
But as the world reels from the toxic fallout of subprime, there's been a flight back to the safe haven of gold.
I think you'll see a new attitude towards risk coming out of this depression, and that will favour gold because of its characteristics as a diversifier and a store of value and an insurance asset.
There are several ways to invest in gold. On the futures market, where you're betting on the movement in the price, or so-called physical gold, like bars and coins, and a new hybrid instrument, gold exchange-traded funds, or ETFs, which are backed by physical gold.
Although the gold futures market has come back and has started to pick up in size again, the much bigger trade now is in the physical, it's in the cash price. That's why you've seen the exchange-traded funds swelling so rapidly.
It's a very diverse market, and it means demand for investment and jewellery is spread across the world in different ways, which I think introduces a number of checks and balances into the gold market, which again I think is something that investors are very thankful of in this current crisis.
It's also worth bearing in mind that with gold production worldwide down, the precious metal has increased scarcity value, and that will keep prices high. What is unusual about the market at the moment, though, is that the dollar is also high. Those two prices usually move in opposite directions. But there's speculation that gold is anticipating a plunge in the dollar if investors lose faith in President Obama's plans to reboot the US economy. Whatever happens, this year the Oscar for best performance on a commodity market, or indeed any market, will go to gold.